Paul, how can investing be a lot more fun than people make it out to be?
I love investing.
Me too. It's great.
And the great part is when things are great, it's even more fun to me. When stocks are going down, I love it. This is something you'll rarely hear, but that is what we do on this channel. We have reprogrammed ourselves and we're helping other people who see the way we see the world and will get excited when things go on sale.
Yep.
Investing has usually been reserved for the stodgy guy in a suit and tie. The world has changed in that regard. It's not about that anymore. It's about finding a process. Guys, everybody out there, I don't care how much money you've had. I've literally met people with hundreds of millions of dollars, and I'm sure there are people with billions who've had sleepless nights about money in some fashion in their life.
Especially when COVID happened. I mean, it got scary out there for sure.
Oh, absolutely. I mean, you didn't know your job was when the world's going to be open. Let me give a story. We owned a big property in a suburb of Cleveland called Shaker years ago. This property did very well. Our CEO right now used to manage the property. It did very well. And I would literally wake up in the middle of the night sweating because I thought about the property taxes on this property. That area's property taxes were skyrocketing every year. Everybody just thought, let's just tax the rich property owners, and that's it. That kept me up at night. So even though I had all this money going and the deal was going great, I was worried about one day waking up and they double my taxes. That was a real concern of mine. So I sold the property. Okay. We all have financial concerns at some point. If your financial concern is retirement, these are the solutions for you. Make it fun. How do you make it fun? Well, first off, what we have done here is with our software, we have a great retirement calculator. I think it's one of the best ones out there because not only does it show you how much money you'll have in retirement, but it'll also show you, do you have enough money to live the rest of your days? Because most retirement calculators stop at retirement. You go, oh, I have $4 million. This is great. Well, what if you spend $500,000 a year? That's not very great. So let me show you it. This is our Everything Money software. We go to retirement calculator. I start by entering an age in. Let's start with 35. Let's say you want to retire at 65. And your current savings are $250,000. And guys, if these aren't your numbers, that's fine. If you're like, dang, I'm 35 and have zero. Seth here was 30 and had just started his career because he had a PhD. Everybody's path is different. Don't worry about that. That's the great thing about this tool. It can give you peace of mind, which increases your enjoyment of investing.
Absolutely.
By telling where you stand. Now, Seth didn't realize how much money he could have in retirement until he saw a retirement calculator. Correct, Seth?
For sure.
All right. Let's say you save $15,000 per year. And let's say you increase your savings by 3% per year. And I always assume you're going to invest in low-cost ETFs. And the market in low-cost ETFs have done about 9.9% per year. And during retirement, you're going to scale it back. Let's say you make 5% per year. And also, you're going to live to age 90. So guys, this is the difference of our software. It asks you what you think you're going to live to because you need to make sure your money can outlast you. Even if you want to die broke, that's fine, but you got to make sure you can actually get to that point. And let's say inflation is 3.5% and your current income is $100,000 a year. Now, what percentage of your income do you want to have in retirement? I always put 100%. I want to make the exact same amount. You might sit there and say, you know what, Paul, I'm going to be a lot more conservative in retirement. But to be conservative for yourself now, assume the same income level. You hit generate. Immediately tells you, do you have enough for retirement? Yes. Now, if you're 35 now, at the age of 65, you'll retire with $8.2 million. $8.2 million. And then when you pass away, at the age of 90, you'll have $7.8 million because you've been spending money along the way. You're going to retire with millions of dollars and you're going to be able to leave something to your loved ones in the future. Now, here is a solution that'll provide more happiness and peace of mind for you. Let's say you hire a financial planner. 82% of managed funds do not beat the market every year. And over a long period of time, it's practically zero. But worse yet, they not only don't beat the market, they charge you 1 or 2% a year in not being the market plus fees. So your 9.9% returns immediately drop to 7.9. Let's say 2% conservatively. They miss by 1% a year and they cost you 1% per year. Seth, were you surprised to hear this when I used to talk about it?
Yeah, because I thought getting a financial advisor was the exact path you were supposed to do. Just hire someone to do this for you. But you've proven that we can just do this ourselves.
If you're younger out there right now, you have friends who are financial planners. What acumen did they have that made them financially knowledgeable? Mm-hmm. They're basically salespeople. More power to them. But if you think they're smart with money, I've never met a financial planner where I said, this person needs to handle my money. So how much does that financial planner cost you?
Oh boy.
7.9% a year. generate,
Not 8
guys,
million.
you have suddenly can't even retire. You can't even retire and live the rest of your life. You got to save $55,000 more per year almost. You were saving $15,000. Now got to save $19,000, $19,500 per year. That is a 30% increase. And look at this. Instead of having $8.7 million in retirement, you're down to $5.1 million at the age of 65. That financial planner just cost you over $3 million. And instead of dying with $7.8 million, you now theoretically would die with debt of $2.5 million.
Uh-oh.
That's a $10 million swing, all because of this financial planner that you love so much. That is the difference. Now, what's the solution? Guys, we have a process. Value investors have a process, and the process works over long periods of time. If you're able to use that process to beat the market by a measly 2% per year, instead of getting 9.9% returns before, you're now going to get 12% returns. All the same numbers. You have enough for retirement. Remember, with the financial planner, you had 5.1 million. Doing it on your own and learning the right process, you now at retirement have $13.6 million. The only thing standing in the way of this and you is you.
Mm-hmm.
This is the only thing. The financial planner will not help you get there. The financial planner will only make it harder for you to get there. And when you finally pass away, the age of 90, you'll have $26 million. You'll actually die with double the money you had upon retirement. This is how important the right process is. So, what is that process? The process is our 8-pillar process and value investing process. Our 8 pillars are a tool as it's used to screen out companies that you can then choose from. Okay, so let's pick a company. Uncle Seth, tell me a company we want to look at.
Microsoft, Google, one of those fun
I love
ones?
it. Let's pick Microsoft. Very popular company today.
Yep.
We go to our 8 pillars. We type in Microsoft. Okay, this is the chart of Microsoft the last 1 year. You can do 5 years, 10 years, etc. in our software. First pillar, we want the 5-year PE to be under 22.5. First page, 47.8. That's an X. So it's over double where we want it to be. Does that mean it's not a good buy? No, because if Microsoft is going to double every year in revenue and profit for the next 10 years, we'd absolutely pay that. Pillar number 2, we want the 5-year return on invested capital greater than 9%. This tells us how they're investing the capital that's invested in the business. It is 17.4, almost double what we want. Wow. That's incredible. Pillar number 3. What's pillar number 3, Sethi?
Revenue growth. We want the revenue going up.
So we simply go to the income statement at the top of our software. 5 years ago, 96.6. Last year, 168. That is a check mark. That is massive growth. Pillar number 4.
Profit growth.
Profit or net income growth. We scroll a little bit further down to the net income line on the software. 25.5 to $61 billion. Definite growth there. Seth.
Shares outstanding. This is crazy.
This is very popular within our channel. This is a big part of the process that it's always overlooked by the general public. This is why you're here to solve this problem. You want to find what everybody else is not finding. This is one of the biggest aspects, shares outstanding. You want the company decreasing their shares outstanding, not increasing it. If they increase it, they are financially murdering you. They're splitting the revenue and profit amongst more investors now. You're getting a smaller and smaller piece of the pie. 7.93 billion shares outstanding to 7.55. They are buying shares back, which means if they continue to do that, as time goes on, you're going to keep your shares. So now as the shares outstanding goes lower, you're going to get a bigger piece of the pie. Pillar number 6.
This involves their debt.
So what do I feel about debt? Like, why is debt important, Seth?
Well, so there's a lot of doom and gloom coming up maybe the next decade after a lot of positivity. And if companies have a lot of debt, they may not survive and your investment could be at risk.
Yeah, and the funny part is he just sat there and said in the next 10 years because of all the positive. Guys, there's always going to be doom and gloom. And there are cycles in this world. And there's always going to be good times and bad times. The companies that are going to last are going to be the ones that have the least amount of debt or can handle their debt the best. So what do? I go back to our main page and I go to our 5-year average free cash flow for Microsoft, 43.4 billion. I multiply by that by 5. That is $15 billion. So I want their long-term liabilities to be under $215 billion. That would allow them, if they replicated the 5 years of free cash flow again, to pay off all of their debt in under 5 years. So I go to the balance sheet at the very top, and then I scroll all the way to the bottom. Their total long-term liabilities are $103 billion versus the 215. That means they can pay off their liabilities in 2.5 years, guys. That's incredible. That means to me that it's going to be hard for Microsoft to go under because they have very manageable debt. Now, pillars 7 and 8 have to do with free cash flow. Seth, what is free cash flow?
Well, this helps us take the cash from operations minus their capital expenditures, come up with a number, and then use this to determine what market cap we want to pay for this company because we're buying a company, Paul, not a ticker symbol.
That is the most important point about investing. Part of the process is you are buying a company, and that company is going to be able to buy back shares, pay dividends, pay down debt, invest in itself, and make acquisitions using that free cash flow. So on the cash flow section, at the very top, we hit the cash flow of our software. Go right here, and I added this line and did the math for you. 5 years ago, they did 31.4. Last year, they did 56 billion. That is a check mark. Massive, massive growth. And our final metric, we take the 5-year average free cash flow, we multiply it by 20, and that is call it $800 billion. That's the market cap we want to pay for the company as a starting point. It doesn't say if it's not there. What is the market cap of Microsoft currently?
$2 trillion.
$2 trillion. So 2.5 times more. Does that mean don't buy it? No, not necessarily. Now, before we get into how much you should pay for the company, that solution of what should I pay for this, there's a lot of math. But guess what?
I don't want to do that math, Paul.
Great. This is our 8 pillars tab. We do it all for you. It's right here in our software. It did all of this for you. And it had all check marks except for our valuation metrics. Now, Seth and I love this because this allows me to then watch the company and after the stock analyzer tool to determine what price I want to pay for the company based on my assumptions, I can then wait for the company to hit that price. Because everything else I love. Oh, look, I got a message.
Yeah, Paul, this is the process that I really needed help with as a new investor is, okay, all this sounds phenomenal, but what about the stock price? Because sometimes the stock costs $3 or $3,000. I mean, what are we? So currently the price is $273. Is that a good price for Microsoft?
So let's go to the stock analyzer tool. This was created. Okay, guys, every investment is the present value of all future cash flow. I get in our community up here, people repeat this over and over because I repeat it until I'm blue in the face. Every investment is the present value of all future cash flow. You outlay money today and you expect cash flow in the future. Okay? So, since we don't know the future, we have to make assumptions. The stock analyzer tool will give you the performance of the company metrics that matter for the next for the previous 1, 5, and 10 years. And then my job is to make conservative assumptions about the future. Now, you can pick between 1 and 20 years. I always have it automatically go to 10. First things first, revenue growth. Now, my job is to be conservative because I want to buy companies that are selling for less than my conservative estimates. So Microsoft's so big, I'm going to go 4, 6, and 8%. You might sit there and say, Paul, but next year they're going to grow 10%. Yeah, but what about 10 years from now? You have to look at an annualized growth rate. And I really go conservative on these. Profit margin. So I look at the last 10 years of profit margin. We go 25, 27, and 29. Free cash flow, 29, 30.5, and 32. PE, I'm going to go 14, 16, 18. Guys, the only time a company should get a really high PE is if their growth potential is huge. The lower the growth potential, the lower the PE. Think about that. If a company's going to grow 100% a year for the next 5 years, you absolutely should pay a huge number of PE for them. But if they're going to grow 0 for the next 5 years, what are you going to pay? You're going to pay a lot lower multiple. And then finally, I want a 12.5% return on my money. Why is it 12.5%? Well, I can invest in an ETF and get 9 or 10%. So for me to have proper margin of safety and for basically paying myself for my time, I want a higher return. So I put 12.5%. Very easily, I hit the analyze button and boom. Guys, what's this telling me? We have a low of 80 to 90 and a high of 140 to 150 with a mid of about 110 to 120. The stock's currently 273. So it matches up with our 8 pillars showing that the price to earnings and the price to free cash flow is very high. So I need the stock to drop. Now, here's the great thing about our software. You don't have to remember this forever. You sit there and say, okay, well, when the stock hits my high, I'm going to add it to my watch list and notify me when it goes below whatever price I pick. Notify. And guess what? Here's my watch list page. It's all the stocks I've picked. All the software does this all for you. It does the majority of the mundane, boring work for you. That way you can spend your time enjoying investing. That is what we're here to do. But the best part is, the one thing that Seth and I found was when we were getting into investing, it was lonely for us.
Yes, very much so.
It's hard to find people who think like this.
Most people don't.
99% of people don't.
Yeah.
The fact you've made it this far in this video means you are special and you are different.
Absolutely.
So find like-minded people. And guess what? We have that right here. Our EM community. There are over 6,000 people in this community that are there to talk every single day about investing. Since we started this video, I've gotten how many messages? People talking about everything from crypto and Tesla to value plays like Hewlett-Packard and Smith & Wesson and all these other value plays. All of them, it's all done in different chats in an organized way. This will get the community of like-minded people with you, so you're not going to be distracted and lose the fun of investing because you think you're doing something wrong by the outside market. This allows you to center yourself and enjoy yourself and have peace of mind. That's the most important part of this.
If you have felt lonely out there, you can join our community and Paul will tell you everything you get.
All right, guys. So you get everything you saw in this video. You get the 8 pillars retirement calculator, stock analyzer tool, which you did, 8-pillar portfolio. You can put all of your stocks, up to 50 of them, in the portfolio to see how they look as a whole. Exclusive video content. Every day, Seth and I release a video directed just to our community, not available on YouTube. Watch list as you saw, but you also get everything that's coming up soon. All of these that are coming, you get as well. You get the community, you get 30 years of financial data. You get all of this on your mobile phone. We have an iOS and Android app. All of this works on your mobile phone. This is all available for less than a cup of coffee every single day. You saw the numbers. This can make you millions and millions of dollars in your retirement, all for less than a cup of coffee every single day. This is a no-brainer. 2 ways to sign up: everythingmoney.com, or for international users, Patreon. Either way, you get everything available here and the future. Sign up now. Whatever price you sign up for today, you are locked in at that level forever. So sign up. It'll be the smartest financial decision you make today.